it's never happened. So we're sure.
Huh? Actually, 6 o'clock. 6 o'clock. Six.
I was talking about.
Okay, good evening. The time is 6:10. It's Tuesday, June 2nd, 2026. We're here for the DHCR Rent Guidelines Board research presentation. Madam Chair, I'll hand it over to you.
Thank you. Good evening, everybody. Thank you for being here. We have tonight we will receive the presentation of the DHCR Research and Analysis Unit, which will help this board to determine guideline rates of rate adjustments for leases commencing or being renewed between October 1st, 2026 and September 30th, 2027. In addition, they have already presented us with all the reports and documents related to these rent guidelines. And we will discuss that. I will now take a roll call. Please respond if present. Evelyn Santiago is on her way. Natalie Telfield, I don't know if she's gonna be here. Kenneth Fielder.
There.
Sylvia Hammer is gonna be a little late today. She already announced it. And Gregory Smith. Tamara Stewart.
Present.
And Robert Whitton.
President.
Let the record show we have quorum. And we have some visitors here today with us. Welcome. I just have to remind you that this is a meeting just for the board. And no interaction between the board and the presenters. We decided to schedule this meeting earlier this time because we have a request from the owners to the members of the DHCR community. So the owners, would you restate your request?
Yes, hi, I'm Robert Withers. Again, on behalf of the owners, we'd like to ask the members of the who are here today for a breakdown of the percentage of the ETPA to new ET. Basically, what we're looking for is a percentage of ETPA to non-ETPA units from the survey in each building and in each community. So I didn't have my glasses on.
So, I'm gonna let the members of the DHCR introduce themselves, starting with.
Can you just, I'm gonna do PT what?
Emergency tenant protection.
ETPA.
Hold the phone, wait.
The ETPA is the legislation which gives us authority to act. And it gives us authority to set the guidelines. That's the ETPA,
Okay,
Emergency Tenant Protection Act.
okay,
And the other acronym we may say here is the RGB, which is the Rent Guideline Board. That's us.
well, I know that, I thought you said PT. All right, okay.
So I will ask the members of the DHCR to introduce themselves. Please.
Hi, Salvatore Howie, Research and Analysis Unit, DHCR.
Michael Languli, Research and Analysis Unit. Guy Alba, Research and Analysis Unit.
Thank you. So, you heard the request from the owner. Any one of you who would like to address this question?
Sure, can I just have the owner rep, repeat exactly what they were requesting? Just wanted to make that clear. Sure.
We'd like a breakdown by percentage of ETPA units to non-ETPA units from the survey per building and per community.
I think a couple of years ago, you said that at a minimum, you could at least get 90%. Of, if there were buildings that had 90% ETPA. And we're looking for a complete breakdown.
Okay, so what you're requesting is a breakdown for every municipality. And you want the total, or you want the total combined municipality, or for each building that's tabulated?
We'd like both if possible.
Um,
If not possible, we'll take whatever we can get.
yeah, we're just, we could probably provide the total municipality and give you a breakdown of regulated and non-regulated units per municipality, I think. Is that something that would be acceptable?
No, no.
Okay, so what do you ask?
The concept is that in a building where there are ETPA and non-ETPA units, our position or the position of the landlords is that the non-ETPA units in effect subsidize the ETPA units in terms of the figures that go into the study. So in other words, if you have a landlord that's charging $5,000 a month, to use a number, that income goes into the total income of that building, even though that is a non-ETPA unit, and it is considered as part of the income. So what we're looking for is somehow to parse out the non-ETPA units and only consider ultimately the ETPA units if we can do that. And we understand that there may be issues in terms of expenses and whatever. I understand that.
Correct.
Yeah,
But at least we would have a percentage in terms of the rent to deal with, and then we can figure out how to deal and allocate the expenses.
yeah, I understand the argument or the objective of the owner's side. The issue is when you're dealing with a building that has mixed usage of regulated and non-regulated units. It's not only the amount of units in the building, it's also the size of that unit as well. So you may have a unit that has a studio that's deregulated. So how do you compare studios that are deregulated to maybe, another unregulated unit that's a 2-bedroom or a 3-bedroom? So there's no formula or easy way to break down expenses when you're dealing with different sizes of units, as well as different sizes of buildings, as well as different sizes, different municipalities. A building that's in one municipality may garner more share of rent and more income than maybe say something that's in, Yonkers or White. So it's really hard to break out expenses and income. You could easily break out the income because you know how much the rent for that owner is paying, but at the same time, when the owner provides us with the rent, we don't know which tenants actually pay their full amount, which tenants are behind on their rent, which tenants may have preferential rent, so there's quite a bit of variations and variables within that. We can provide how many, what you see in the tabs is how many units are regulated, how many are deregulated or non-regulated. We can also break that down by municipality if that's helpful. But to break it down by building, there's gonna be some confidentiality problems. And also just, there's no real statistical way to break down expenses, just because there's so many variables within this sample.
Well, I think at least to start with the income is a start. And I understand there may be variables in the expenses. Obviously, we pointed out a number of them. but little by little, we may be in a position when we start to break them down. Item by item, or building by building, or apartment by apartment. We may get to the expense point, but we'll be happy at this point in time. To just look at the income, and then we'll deal with the expenses later.
Well, kind of like I said, we don't know when owner provides their income, we don't know which tenant is paying the income, right? So if the income is, there's 10 units, 2 are deregulated, 8 are regulated. We don't know which of those tenants actually paid their rent and which did not. If they're say, we have registration data which shows how much the rent should be. So if that number doesn't match exactly, which it rarely does. Then we don't know who paid the rent, who paid their rent, who didn't. So. If you were to break out income, we don't know if the non-regulated tenants paid their rent and the regulated tenants didn't pay their rent. There's no way to know who's paid the rent and who didn't pay the rent.
Well, ultimately. You have to make certain assumptions. That over a period of time. That it'll either equalize or not equalize. But it's a start. I'm not saying that we have all the answers.
Sure.
But I think it'd be a start for us to know what percentage of tenants in a building are non-ETPA and are subsidizing the ETPA tenants, whether they actually paid it or not. We wouldn't know that, but over a period of a year, I think we would ultimately come out with a fairly close approximation of who pays and who doesn't pay.
I think there's no possible way to know who pays their rent and who does. I mean, you could assume, and I could assume, but I can tell you there's no possible way for us to decipher who pays their rent, who paid, who didn't pay their rent.
I don't care. One way or another, you have the rent that the landlord.
Sure, we could provide you with the income for the building and we provide you with the income for the total population. We could possibly break it down by municipality, but I don't think we could provide income by income per building, per regulated and non-regulated. Now we're talking into confidentiality kind of reasons, because we're breaking it down so far that it's going to be, almost identifiable. If I'm providing 420 samples and I'm telling you building 1 has 2 units that are deregulated, 8 or 10 that are regulated, and then I'm giving you the income of that particular property, and you also know it's in, Portchester, and Portchester only has 3 buildings in the entire population. It's not really giving us enough, anonymity. Because if only one of those buildings, or even in Rye, there's 1 building in Rye. If that 1 building is Rye, I list that 1 building, and I give you the income, I give you the tenant breakdown, you're gonna know the income of that building, and we can't provide that type of data.
The data that you get is the total data in terms of the legal regulated rent, right?
We have the data of what was received by the owner, not necessarily legal regulated rent, because again, the legal regulated rent could be a lot higher than what the owner's receiving based on preferential rents and whatever the tenants are paying. So legal regulated rent is normally higher than what is actually received by the owners. Because it's whatever the owners reported and what the owner collected.
Okay.
That would be assumed that the owner collected all apartments, all the exact amount of rent and the legal regulated rent. Where you guys know, and you guys had this discussion before, that there are preferential rents.
Do you indicate that to us as a differentiation between the legal regulated rent and the actual, rent that's collected?
Yeah, well, we provide statistics on what the average legal regulated rent is in the entire of Westchester County. But then when we're providing the income, the total income, that's what was collected by the owners and what was reported by the owners. So that's the exact amount as reported by the owner. So it's not going to be legal regulated rent, it's gonna be the exact amount.
And do you have both of those figures that you can give us?
Well, we provide you with average legal regulated rent for the entire county. And then kind of like we said, we provide, the total income, for the county as well. So you could kind of estimate based upon how many units are registered or how many apartments, you could kind of get an idea, but then again, like we talked about, we do have mixed use buildings, right, where there's non-regulated and regulated. So the legal regulated rent is not taking into consideration those non-regulated units. But the total income is taken into account those because we're reporting what the owner reported, which is the income received from the entire building.
Is there a way to strip out buildings that are majority ETPA like 90% or above and do an analysis on that so that we have an idea of how many of those buildings exist versus the rest of the housing stock?
Yeah, sure. So that's kind of been discussed over the past couple of years. Our opinion is, but again, this is something that the board has discussed, and this is something the board could vote on, and then they would make the decision. But our opinion is the rent stabilized population is mixed between units that have regulated and non-regulated units. So if it came about, we prefer if the board chose either the total population or a figure that they deemed that was acceptable. We don't want to provide two different tabulations because then if it favors, say, the tenant side may want to use that set this year. If it favors the owner side, then the owner side is gonna say, well, we like this set of tabs. So I think I would recommend, but it's up to you guys, to do one set of tabs, whether it's 90% or 80% or 50%. But one set of tabs over two different set of tabs, because we just feel that it would create a different kind of, there's two different types of calculations, and whatever favors one side, they're gonna wanna use, and whatever favors another side, they're gonna wanna use. So I just don't think it's fair to do that. It's up to you guys if you wanna do that, but we would suggest to use, one figure, either the total, or you guys would decide on a percentage and kind of stick with that.
So you could do, let's say, 75%.
We could do it, it would definitely cost, it definitely, all our counties do not do that, so it's gonna cost some programming kind of issues for us. Obviously, we can't do that this year, it would have to be something for next year. But, it's something that, if we move to that direction, we can't just, not that we can't, but it would be very problematic to change it every year. Say this year we're doing 75, next year is 90, then the year after is total, because we're changing programming. And we don't have, unfortunately, the way the state works, we don't have full control over the survey. We have to go through ITS, because now ITS is a separate complete agency besides us, and then we have to go through their protocol before we're able to get something done. And there's different bureaucratic channels we have to do to get that process. So it takes some time. So to change back and forth year over year is something that we would prefer not to do, because it would be timely, probably costly for the state as well, and also we're not on, there's priority lists for certain things, so it would depend on how the priority goes. But we could tell you, the breakdown, if we were to choose 90% for this year, we would probably lose anywhere from 70 to 90 buildings based upon that. So there's 70 to 90 buildings, I don't know the exact number of how many buildings were 90% or below. Another issue we have is when owners fill out the survey, there's certain checks and there's a lot of instructions within the survey, but the owners don't seem to follow them sometimes. So a owner occupied unit, well, after 2019, owners are only allowed to have one owner occupied unit in their building. A lot of them still have 2, 3, multiple. Also, an issue is an owner occupied unit is not exempt, it's only temporarily exempt. So what that means is if we were to break out 90%, an owner that has 2 owner occupied units, which is still supposed to be rent stabilized, would now be removed from the survey, because it'd be at 80.
When you say owner occupied, you mean by family?
Family or employee or super something.
Perfect.
Yes. Well, yeah, just a super or family member, so they could charge because it's pretty much whatever they want. And so owners also make that mistake as well, so technically that owner occupied or family occupied unit is temporarily exempt, and it's supposed to be listed as rent stabilized. Sometimes we just accept it, so sometimes the numbers are a little lower than what they should be. So if we have a listing of 11,500 in units, then maybe another 25 to 30 units that are actually regulated, but the owners don't really understand the law, so there's still an extra maybe 25 to 30 units that are rent stabilized. But if we use that 90% or a percentage breakdown, we have to do even more research to figure out what the owner's doing. And a lot of times the owners don't send back the survey. So we have the ability to send back a survey. If we find an issue with the survey, we send back the survey, we write in the text box that there's an issue with the survey, whatever the issue is, say that it's owner occupied, you must list it as rent stabilized. It's only temporarily exempt, it's not permanently exempt. We resend it back to the owner just returns, it doesn't do anything. We'll send it back again, the owner returns, it doesn't do anything. We call them, leave a voicemail, send an email, they don't respond. The owner sends it back again. Now we have a choice. Do we exclude it and not keep it as everything else? Or do we continue to send it back, right? So that's kind of another issue where we have this kind of percentage breakdown when it's especially high at, say, 90 or 80%.
Right, and as Sal was saying, if you wanted to go about your 90% rule, and we go through all the hoops that Salvatore just mentioned and sending back a survey where an owner lists 7 units, one is exempt because it's owner occupied, and he doesn't get back to us, or he doesn't follow our instructions, we would have to exclude that building.
But technically,
If you won, because it would fall under the 90% rule.
but it would fall into your category, right?
Right, into your
Because it should
category.
be 8 if 8 is regulated, but the owner's sending it and showing a 7 and 1, right? So 7 and 1 is gonna be 1/8, so 1/8 is below that 90%, so that's kind of where.
We'd be losing a lot of small
Yeah.
buildings.
So your suggestion would be don't use the 90%, use something lower than that,
Well-
to offset that.
Sir, we tabulated 427 buildings this year. That contain 12,956 units, of which 11,829 are subject to the ETPA. Which comes out to a 91.3% EDPA sample.
So yes, it's the average, but we are still well above the 90% if we're including the average.
This
Yes,
is the whole universe.
yes, it does include buildings below 90, but includes a large majority that are 100. So the large majority is still 100 or kind of above that amount, but there are some that are below, right? And I know Ken's email or letter that came to us in March kind of discussed the rent guidelines board and what New York City did and kind of some of their issues. We can tell you that we have never used any buildings that have below 35% ETPA. It's never happened in and it definitely hadn't happened in the past couple of years, so it's
So
never-
every building that you surveyed has been 65%.
that we include, yes, we
That
will
we
exclude.
include.
That we include, so in the tabulations, we'll exclude buildings, but definitely this year and last year, I can tell you, there was no buildings below 35% ETPA regulated.
New York City will use a building with
One,
10
100.
well, 10 units, one is stabilized, they'll include it in the sample. We'll never do that.
So your minimum is 35%.
There is no
It
minimum.
depends on the year, to be honest, depends on the sample we receive. I can tell you within the past 2 years, there's been nothing below 35%. Somewhere in the 40s, we'd have to look it up, but it's definitely, that would be the lowest. But in the past 2 years, there's been nothing below, at 35 or below 35, and I know you kind of made reference to that in that one letter, and we agree, that is a large change between something that's fully regulated or 90% regulated and something that's 35% or below. So that was a choice that was made where we decided that we shouldn't choose something based upon that. And it varies year to year. Sometimes it's closer to a higher number, sometimes a little lower. It's really based on the sample. And we'll get rid of the outlines, right? So that's usually what, it happens during a survey or a sample. You want to get rid of the lowest and, so that's what
Do these buildings have any commercial component in?
Sometimes they do, it really depends on the building, some do have commercial, some do not, it really depends.
Storefronts, yeah.
It could be a storefront.
Do they skew the numbers?
I mean, it's gonna raise the income, of course, right? So if you have a property that has a storefront, it's obviously gonna raise the income. Sometimes, again, that's another kind of gray category where we don't know if it's parking or if it's a storefront, if they don't list it properly. So there's certain directions, we have instructions on the survey, which tells you how certain income should be listed. So residential income is pretty clear and straightforward, right? It's residential units. But a buildings could also have, cell phone antennas, parking spaces, laundry rooms, yes, various things, so. It's hard to know sometimes if they're business units, storefronts, or if they're income from other things.
So what you're saying is that you will not do 90% and 100%.
We didn't say we won't do it, we just said we prefer something a little lower, that's our preference. Again, it's your guys' decision to vote on what it would be, and we kind of just described a couple of the issues that we have with a 90%.
But in fact, this year's numbers were 91%, right?
As a total, as average, so it's at 91.3. We could tell you Nassau has a lot more deregulation than Westchester, and it's kind of had deregulation prior to it, and they're usually always at about
Yeah, what?
80%. So Nassau is usually around 80%, whereas Westchester always hovering at 90. I know last year we were at 89, I think, or 88%. This year we're at 91.3. So, we did take into consideration what some of the concerns were with the board with 90%. So we definitely wanted to, be cognizant of not having those, you know, those larger properties that have a lot of deregulation.
Just be aware also that if the board asks us through a vote to change any of the formulas that we've been using for 40 some odd years, it will take us about a year to work with ITS to change it. Now, we can come back to you and present you the data. Hopefully ITS will work with us, and in 2027, half the board here does not like that. That's gonna take us another year or so to rechange the program again. So, again, changing the actual systems program is a two-agency work. It depends, HCR, the HCR, us, and ITS to basically put together a whole staff of changing all our formulas and calculations to whatever the board would want. So it's not something that we were able to do overnight, just be, cognizant that any changes that the board chooses now, if they don't like it next year, it's gonna take another year to a year and a half, depending on whatever it is, to change the program again,
You
so.
mentioned that it was 91% this year. What, do you happen to remember what last year was?
Yeah, we said it was 89.
Because last year we were calculating about 420 surveys compared to, I think there were
27.
27
Yeah.
surveys this year, so we're right around the same.
Yeah, also one of the last tables on the chart, we definitely have less of the buildings this year that were 100 and above. Unit size, so total size. You know, when we get into our meetings, I could kind of tell you as compared to last year. So we actually have more buildings this year. We're at 427 as compared to last year, which is 420, but we have less units as a whole. So less units as a whole,
Small building.
so we have smaller buildings. So buildings that were 50 and below, we have maybe 15 more of those, and we have maybe 7 or 8 less of the larger buildings that are 50 and above, and that's the 8 difference, and then that's the difference between we have 7 more this year.
One more question, I'll let you get on with the presentation. Is there any way of breaking it down to the 5 areas that we concentrate on, shall we? Was it just for?
Like the 5 largest communities.
What do we, yeah, and what percentage of, in those communities,
But they're unregulated
regulated versus non-regulated?
by municipality.
Yeah.
Yeah, I think we could do that. We provide something where we give you guys what the EPA unit count was, the regulated unit count. So usually those 4 big ones, Mount Vernon, New Rochelle, White Plains, and Yonkers, they always make up anywhere from 85 to 90%. So it's a large portion, is those 4 municipalities. So it's gonna be probably the majority as well. If the most of them are regulated, we could vote, that's something.
But knowing how many of those buildings are in Mount Vernon, Rochelle, we're gonna be that.
Okay.
Yeah, those 4 munis make up 88% of the
So
tabulated.
that,
I would have.
that would not require you to reprogram the whole system, right?
We do our own program.
Yeah, we would it's more of a descriptive statistic of what we are already working on, right? So it's just more work for us, to be honest, but it's not something that we require from ITS. It's just
So
something.
maybe we can start out with that,
It would be helpful.
make a motion.
I make a motion to,
Excuse me. Is there an opportunity to ask questions, please?
Yeah,
Thank you.
after you heard, the discussion here, I like to ask my colleagues if they have any questions regarding the matter.
First, thank you, gentlemen, for coming. You always, are really responsive to whatever we ask. One, please clarify. Are any of the other municipalities asking for this data that is being?
Any other
requested?
counties?
Yeah.
Any of the counties that you staff for?
By are any of the other counties asking us for a breakdown by municipality of what Mr. Finger just asked for?
That, and then also the question about the percentages, et cetera. Is this a standard
Specifically,
request or is
no.
this a non-standard request?
No, this is non-standard, and honestly, Westchester gets the most detailed data out of all the counties. Westchester is the biggest, which is another thing, but we do provide you guys with quite a bit of data as compared to the other counties.
However, in Nassau, we do, and in the past, there have been separate guidelines for Village of Hempstead. And the board is given separate tabulations for the Village of Hempstead.
Separate guideline, I missed that. Separate guideline for what?
Separate guidelines and separate tabulations for the Village of Hempstead.
Oh,
So
yeah.
in a way, that municipality does get separated out from the whole Hempstead, yes.
Yes.
But they don't ask us for a breakdown of all Nassau municipalities.
Ms. Santiago has a question.
Yes, can I ask why the Village of Hempstead gets that special?
They get a huge turnout from their tenants. Every year, there's a lot of testimony. And it kind of, makes an impact. And the board is listening.
What kind of additional data do they ask for?
Tenants submit written reports, oral, presentations on conditions and things like that. Over the years, the Village of Hempstead is always very well represented at the hearings. And the board has been listening.
I also wanted to, I recall when this discussion came up, in 2023. That, what was being requested was to require a significant amount of additional work, and it sounds like I is once again saying that. To make changes, and change to something that no one else is doing would require a significant amount of work between the two different agencies. So I'm just wanting to confirm that I understand that correctly, and that I want everybody else to understand if that is in fact the case.
Yes, so a couple of years ago, we kind of streamlined all the counties to, be very similar, have the reporting very similar. To, I don't know, to maybe be preemptive, whether it may be, but so all the counties are very similar in the forms, in what we report. Besides some additional data requests that come year by year, so yes, it would be additional extensive work, like you said, for our agency as well as a outside agency, which is ITS, which programs our service.
Yeah, the research unit. Pretty much we have no control over the programming of the survey. Any changes that need to be made have to go through. Mr. Alba usually sends a request up, sometimes to the governor's office, through IT, and then they prioritize things. And not only they're dealing with research requests, they're dealing with other branches of ORA as well. So it's pretty much, we'll get to it if we can. And, it's not as easy as, can we squeak it through in a year? It's possible, but we can't promise that we can even do that. Break it down, by percents. That maybe Guy can expand.
It's just like, you guys were saying. I'm more concerned with, even if we do change it within a year and a half, we have ITS and us on board. I wasn't here for the question, but I'm just following up on what, Mr. Langiuli was saying. Even if it takes us a year to a year and a half and we're able to do it, and we bring the data here, maybe half or more of this board does not like the way this data is. And they say, hey, but for 40 years, you guys have been giving us this data this way. We don't like it this way. It's gonna take us another year and a half to revert back to providing the data. So there's a lot to consider. I mean,
Do you feel from a statistical standpoint that there is some benefit that makes it worth changing? We've been doing
No.
for the last 20 years.
no, we actually looked at the numbers, because this has been brought to our attention a few times by this board. And there's absolutely no substantive the statistical information that will come out of this. Zero. Just like Mr. Howie was just saying, it's very, very hard to pinpoint on the rental. It's gonna be even more difficult to go from rental to expenses. So no.
Thank you very much.
No.
Any other questions? So, do you want to make a motion?
Yeah, I'd like to make a motion that, DHCR provide us with a report that shows, in each of the towns and cities that we're responsible for, what the percentage of ETPA buildings are versus the non-ETPA buildings.
I'll second that.
Can I just ask for clarification on that?
Yeah.
Okay, is that okay, Pete?
Yeah.
Just for clarification.
Yeah, please.
Yeah. So did you guys want it broken down by building? Did you, how did the what's the specifics of the breakdown?
By town.
By town?
By town.
But are you
Community.
setting a percentage?
No,
Community,
so you just want it by whatever the municipality is, and you wanna know the breakdown of regulated units to non-regulated.
That's correct.
Okay, understood.
I second.
Peter, you want to?
Yeah, can I just ask clarification whether this is, even if the board directs, is this something that's feasible for you to collect through the survey?
It will take time.
I mean, I'm just conceptually, I know that you guys have the survey questions, you,
Yeah, I think this is a reasonable request, in my opinion.
okay.
The time.
Not for this year, definitely next year would not be an issue, that's all.
I have a question.
Sure.
So does this fall in the realm of something that if you have to, you mentioned that, you know, if you change a system of calculating these numbers, that it would be difficult to revert back to the old system, or is this something different?
No, this is, I think what they're asking is really just a breakdown of what we already have tabulated, so we already tabulated these buildings. So now we're just providing more detailed statistics on what we already provided to you guys, so. It's just going to be just more details, we're not changing anything, we're just,
Right, we're not gonna
Being
take,
more
we're not
detailed.
gonna take away from what we
No.
currently have, we're just gonna add another
Another component.
layer, another.
Correct. So just to answer your question, this would not require us to ask another agency to come on board and change the programming language and do something. This is something that will take extra time from us, but not necessarily having to worry about reprogramming a system. It takes a year to a year and a half, and then if you don't like it, reverting back. So that's not the scenario.
Thank you.
Correct.
It will involve additional work on
Oh,
your
yes.
agency's behalf.
Yes, absolutely.
But Mr. Alba,
Yes.
so you said it would take longer, so when you give us all these reports, will that affect the timing for this?
A good question. It may affect the timing that we will have to close the survey to the owners earlier in order to provide you with this information. But that I will not know until actually, we sit down and we, run the numbers and see what. For example, you chose, let's say, June 2nd, and we're able to, close down the system for owners about a week ago. So owners had until about a week ago to provide information. It took us about, 7-8 days to provide this. So let's say, I don't know, maybe a few more days just to sit down and break down the data for what you're requesting there. Sorry.
Question. So, could that possibly skew our numbers? Because it's difficult, from what I understand, having been part of this board for 8 years, it's difficult enough to get the landlords to submit the surveys. So requesting them earlier might skew the numbers and we have less data to work with. Am I correct in that?
yeah, it's possible, it's really hard to tell, right? So every year, we really don't have any control over when the owners submit or what time they submit, right? Every year, we open up the survey on March 1st. Every year, we have a deadline anywhere between, the middle of May to the end of May. And every year after the deadline comes, then we send 5 or 6 emails, people call us and say, I tried to submit my survey. They received 5 emails, phone calls, and, the deadline emails, and they're still kind of late. So there's really no way to kind of gauge on if it would be less or not. It's assuming that it's possible because they have less time, but there's really no way to measure that.
Go ahead.
How long do they have to submit the survey right now?
So for Westchester, it's March 1st, and this year we closed at May 25th. So we closed May 25th, and it was March 1st, so they had, well over 2 months.
Almost 3 months.
Yes, almost 3 months, exactly.
Almost 3 months.
You mentioned that the number jumped from 89% to 91% between last year and this year, and that's because it was about 15, did you say 15 or 14 new surveys?
Well, so that's a good question. So you have to take into consideration that last year, if you look at the tabulations, we had 120 tabulated there. Now, it could be that this, I'm sorry, 420, and this year 427. It could be that some of the buildings that you have here, 427, were not a part of last year's and they were part of this year's, or vice versa.
Two different samples.
It's two different samples. You have to consider this as two different samples, and that's why we give you 3 years every cycle of information.
Doesn't indicate, increased interest in regards to making sure that these numbers are heard by the population, by the landlords out there who have these buildings and want to be heard.
It could be interest, but it could also be, our constant badgering and explaining and emails and, phone calls. Yes, well, our job is to try to provide as much data to this board as possible, to all boards that we provide information to. So, yeah, we've been able to improve on, outreach. There's no question about it.
One more question, have you noticed, is it continuing to increase, or is it something where, like, for instance, you've seen a drop off in participation?
I've seen drops in, happens to be in the last 2-3 years, it's a little update, right? I've seen, next year, I could be, sitting here and we could have 380, I don't know.
It's actually pretty close. I mean, last year we got 543 submissions, including an export. This year we got 560. So it's a 17 schedule difference. We're usually very close it's just the way it works out, like 95% of our clients file every year. And then you got the other 5% that sometimes they file, then you gotta change of ownership and they don't have to say that. Yeah,
Maybe building trade or something.
Yeah.
it happens.
Yeah. Okay, thank you.
Well, we have a motion on the floor and we have dedicated almost 1 hour to this subject and we have to move with the presentation. So we have a motion on the floor, Mr. Stecker, would you?
Sure, would it be helpful for me to restate what I understand the
Yes,
motion to be? Okay, so the motion was made by Robert Withers, seconded by Ken Finger. Essentially, the motion is when feasible, DHCR research will provide a report that shows in each town and city under the board's jurisdiction, what percentage of ETPA versus non-ETPA buildings exist.
Yes.
Okay, would you like me to call roll, Chair?
Yes, please.
Okay, Robert Withers,
Yes.
Ken Finger,
Yeah,
Tamara Stewart,
No,
Sylvia Hamer,
yes,
Chair Rubin,
No,
Evelyn Santiago,
No,
Gregory Robeson Smith, Natalie Felsenfeld.
yes.
Okay, so, that motion actually failed. Because it only reached 4 members with 3 voting against and, 1 abstention. And this board is made up of 9 members, and so to pass anything, they need to get to 5 votes. So the motion doesn't carry.
let the record show that, Evelyn Santiago, Natalie Rosenfield, and Sylvia Hammer are present here. And, thank you, April, very much for accompanying us too. So now I'm gonna ask, the members of the HCR to please with the presentation.
Okay, I think we'll start with the landscape document that says Westchester ETPA M&L schedules 2026.
This one? Yeah. Which is good. You're going to put it and then show.
if I recall last year, I made a suggestion for you to number the pages.
Did you?
I did, I made a motion.
I mean, it's the only document that's landscaped, so I said landscape. and
That's all. No, there
Are there?
pages,
Oh.
yes.
Okay, so there's 2,
There's
and it,
two.
and it says
Okay.
Westchester ETPA M&L schedules.
It's a staple set. This one.
But she doesn't have all of them.
Did I not
Doesn't
give you
have
one?
all of them,
Okay.
and neither
There you
does
go.
Sylvia. Thank you. Thank you very much. Looks like this one.
I think, Mike, yeah, we had some late arrivals. Yeah, that's, yeah. Does anybody need?
Yeah.
Ken?
I printed it out, and I came out. I came out with that, considered. Thanks.
No. I'm taking mine up instead of.
First, see which one has first.
Unless we know.
That's it.
Make it then.
Everybody good?
Yes, thank you.
Did they give away all my sets?
Need another one, Mike? Let's see if I have another.
That's all right. I got it. Here we go.
You got?
Yeah.
All right.
Okay, so this particular table shows a side by side of last year's submissions versus this year's submissions. So we mailed out, so we actually do send a paper mailing as well. So we send a paper mailing, we send an email, and we send multiple emails throughout the survey period. But we only do an initial mailing, and the initial mailing this year was 1,514 buildings. As compared to last year was 1,493. Since, you know, the late registration cases definitely came into effect a couple of years ago. And the agency has been more progressively going after these owners. Owners are definitely registering a bit more, so buildings are coming back into basically maybe regulation that may haven't registered in, you know, very quite a long time. So that's why there's an uptick in some of the buildings. This year we tabulated 427 as compared to last year, which was 420. As you can see, there are heat not included in rent, so there's certain buildings where the tenants pay their own heat. So there's another 18 there. As you can see, there's 115 that were not tabulated, 51 non-comparable, 10 new owners, and 54 problematic. As a whole, we received 560 submissions, or 37% of the total Westchester population, and 63% did not submit. But if you break that down by a unit count, so for unit count, we have 11,829 buildings. I'm sorry, 11,829 units as compared to 29,412 units. So we received basically a tabulated amount of 28%, but a tabulated amount of 40 units, 40% of the units. So 28% of the buildings, 40% of the units. And you can see, as we said, it side by side from last year as compared to this year.
Is every municipality in Westchester that has an ETPA represented in that sample?
I am not 100% sure, but in the total population, yes.
So.
Untabulated, I'm not 100% sure, but we're probably pretty close. We almost always get at least one building from each municipality.
Thank you.
We could flip over or flip to the next page, depending on how the printout looks. So now we provided some survey data and some registered data. This table is completely registered data, so this is only data as based upon annual registration. So you can see a breakdown from 21 to 25 of the registered units, so you can see how many units were rent stabilized, how many were registered as vacant, how many as temporarily exempt, which we discussed, owner occupied or super. And then you have some of the permanently exempt reasons. So as you see, over the past 5 years, there are 0 that are higher in vacancy because the 2019 law no longer allows higher in vacancy. Also at the bottom of this page, you can see the average monthly legal regulated rent. So again, this is the amount reported by owners on the annual registration. And you can see the change over time from 21 to 25. The left-hand side is the dollar amount, on the right-hand side are the percentage changes. So you can see anywhere from 1 to 2% change from 21 to 25 year over year.
Please keep in mind, this is registration data as reported by owners. This is not survey data. These are what the owners go in to the registration portal and log in themselves. This is their numbers.
The average monthly legal rent, is that inclusive of ETPA and non-ETPA units?
That's only ETPA or regulated units, so that's only the ETPA.
This is only ETPA?
Yes, yes.
So if the building has non-ETPA units, it's not included in this?
No.
Correct.
And it should not contain preferential rents. This should be legal regulated rents. No preferentials.
This is information that an owner provides in the annual registration to the HCR every year, around this period of time, July.
Any other questions about this table? The next table on top. Well, let's do the bottom table. So the bottom table again is going to be based upon registration data. So, the bottom table is the rent ranges for, apartments in Westchester County. So as you can see, the majority of the units are within the 1,000 to 1,099. So there's 30% in the 1,000 to 1,499 and 31% within the 1,500 to 1,999 dollar amount. So approximately 61% of the units are within that $1,000 to $2,000 range. And you can see the breakdown, you know, based upon the apartment range. If a building has a service order or some type of issue with the building, it can be reduced to $1. So that's why it can go down as far as $1 based upon an order from the HCA. But as you can see, it's a very small number. It's 250 apartments. And we have another 568.
I'm sorry, could you just repeat that? Why would somebody?
There's a fire building, that's vacant. You can continue getting, subject to ETPA by paying $1 a month.
And the top table is now some of what we discussed earlier. This is back to survey data. So this is going to be the units tabulated. So this isn't the building, this is the units. So based upon the tabulated data, which is about 11,000, or a little under 12,000 units. 88% of those units are in these 4 municipalities. Yonkers makes up 42%, Mount Vernon 20%, and as a total, as you can see, it's 88% of the total population tabulated is within these 4 municipalities.
So again,
Yes.
in Yonkers, 42% of the total, 42% of the people who responded, of the owners who responded, who rent stabilizing buildings.
Yeah, the buildings that were tabulated, that were provided in the statistics, we're gonna provide to you next, 42% of those are Yonkers buildings.
So doesn't that really answer the question that I asked before? About having everything done by a breakdown of ETPA versus, I mean, you would imagine that everything else then is not ETPA. I mean, if there's, 68, or I'm sorry, 58% of other residential buildings that are out there, their market rent, 42% of them in Yonkers are ETPA, right? That,
No, so.
Yeah, I think.
Yeah, so, yeah, so this is-
All those that
yes,
reported
correct.
on the survey.
Correct. If you look at page 1, going back to page 1.
Well, we didn't go there yet.
Okay, I'm sorry. Yeah, 427 schedules containing 12,956 housing units, of which 11,829. So Yonkers had 42% of the 11,829, right?
Yes.
And all 4 of them have 88%.
Just to clarify, I'm sorry, so that means that this is only pertaining to those buildings whose landlords responded to the survey.
Correct.
Not the number of existing buildings in any municipality.
Correct.
Survey response.
and is there any idea, I'm gonna press this now, is there any idea of what the percentage of landlords who participate versus don't participate? Was there really no way?
Yeah, it's on
the
the
first page.
It's on the first page. Look at the first page. We discussed that.
Got it, okay, so it's the difference between those two numbers.
Yeah, so the first page is 37% and 67%. There are, 115 that we exclude for various reasons, like we said, new owner is not comparable and problematic. Like we said, some of the issues, we send back the submission, we have an issue, or we're asking the owner for an explanation, they're required to provide an explanation for any increase or decrease of 50%. If they don't provide that, a response, then we may, put in that problematic because we can't get a response. We don't know if it's a mistake, and it happens quite often where the owner may provide just an extra digit. So it could be just an extra digit, so we wanna make sure it's an actual expense, it's not a mistake. So we may just put it in there, and it could be on the low end, on the high end, it could be the income or the expense, it really doesn't matter, it's just something that we deem is something questionable. We'll return it, send an email, call them, if we don't receive the response, we'll put it in that category. So that was the third page of this set, so the final page of this set is now a, unit count breakdown based upon size, so on the left side of the table, you can see the buildings that we tabulated and the size. On the right side, you can see the total population. So 6-unit buildings, there were 45 that were tabulated out of the 427. And that makes up 11%. As we kind of discussed earlier, we alluded to, we definitely had more last year of larger buildings as compared to this year. But, only a handful, less than 10, but it does kind of make a difference in that unit count that we'll look at after. So the left side is going to be the tabulated sample, and the right side is going to be the total population, and these are the building sizes. So you can see basically what the building sizes are on the population of Westchester County as compared to what we tabulated. It's the left-hand side.
What would be some of the reasons why somebody would wanna participate in the survey? As a landlord.
We kind of, we always question that, we feel that it's beneficial for the owners to submit their data. They're reporting the data. If the owners want an equitable guideline, they should be reporting their data and responding to the survey. If they don't, we can't control that. All we can do is encourage them, and that's what we do. We encourage them. So we send emails, we make phone calls, sometimes we get not so pleasant returns of phone calls, and it happens, they just don't wanna comply. So it's kind of just, the nature of the piece.
It's my second year. on this.
Sure.
So please excuse me.
No, it's okay.
I'm learning, right? But the fact is that I'm pretty sure, maybe you can answer, the section 8 requires you. Right, be able to receive section 8 funds for your tenant, from your tenants, that requires those reports. We don't require these things, these are just basically done as well.
Yeah, a number of years ago, we used to have penalties. So there are penalties implemented if an owner filed the survey late, a 3-month penalty immediately. And then if they didn't file the survey, they were not able to collect guidelines. So guidelines started in October, they would have a 3-month penalty if it was late. If they didn't file it, then it would be a month after that receipt of the survey. There was a court case with DHR that, maybe Peter may be more inclined to speak about, where it was struck down and we were no longer to implement those penalties. So that's why there's no longer a penalty for not submitting.
So they are not obliged to give.
Yes. It was because of the court.
Yes.
Okay, it was an appellate court case.
So we tell the owners that, it's not required by law, which is correct, but we always respond with, it's required by the board and it's beneficial to the owners to respond to the survey. There's not much unfortunately that we could do, but we do encourage them. And, we're statistical people, we prefer a larger sample, we want the owners to submit, so we just don't have control over them submitting because, there's no penalties, and, sometimes if there isn't a penalty, people, won't
I'm not putting words in your mouth,
Yeah.
you can't be satisfied with the data set, with the amount of people who are participating.
Well, I would say for a survey, it's actually a pretty good percentage, unfortunately, somewhat voluntary, I would say the survey is voluntary. For a voluntary survey where there's no penalties is a pretty, respectable percentage, response rate.
It's almost the same percentage of people who vote.
I don't know it offhand, but it could be right, yeah, I'm not sure.
Very interesting.
Yeah.
I have to check that.
No comment.
So if there are no more questions about that, we could go to the
Main.
document that has the the seal, the New York State seal on top, it says the governor's name and the commissioner's name and, 427.
427 schedules?
I don't have.
I think
Yeah.
There's,
Yeah, that's, that's.
427?
there's gonna be, two of them that look alike. One of them's gonna say 427 and one's gonna say 18.
Got it.
So make sure you're looking at the one that says 427 on top. Okay.
Okay, so, I'll just read the heading on top, so we've kind of alluded to it a couple times, but, based on 427 schedules, which is 427 buildings, containing a total of 12,956 units. Of those, there are 11,829 which are subject to ETPA or rent stabilized. So, as we discussed, 91.3% of the units are regulated in this sample. This first table, is in thousands, so all the numbers are in, millions, tens of millions, and hundreds of millions, besides the real estate, income, which is a low figure, but this is going to be the total. So as you can see, the income is the top line. There's an increase of income, looking from left to right. There's also an increase in expenses, excluding depreciation, from left to right, and total expenses. So this table is solely the totals based upon all 427 buildings. The next couple tables kind of give you percentage breakdowns, which we can refer back to. So the second table is solely expenses. So it is the percent distribution of expenses. So this is basically a breakdown of the total expenses for the building. So as you can see, in 2025, the largest expense for Westchester owners
Real estate.
was real estate taxes at 18.4% of total expenses. Next would have been the repairs and maintenance at 14.5, and then interest at 13.1. Yeah. Second page, table 2, percent of distribution of expenses. So again, real estate taxes was the largest, with repairs and maintenance, and then interest. So looking across to 23 and 24, for the survey, these 3 categories made up the largest portion of expenses for all 3 years within sample. And it's pretty common.
Traditional.
Yeah,
Very
yeah,
traditional.
pretty common in Westchester for these 3 to be the top 3.
Happened to be about almost 46% of all expenses came from these 3 categories.
And that's almost pretty much across all the counties.
Oh,
Yeah, Nassau,
Pretty
does have-
much.
Nassau has a larger percentage for real estate taxes, but they're usually, kind of the top 3 are those, 3 categories for all the counties. Any other questions on table 2? So table 3 is going to be now the percent change of income and expenses. So table 3 includes income and expenses. And we have 2-year period changes. So from 2023 through 2024, there was a 2.6% increase in income and a 2.7% increase in rental income. For 24 to 25, there was a 3.1% increase in income and a 2.9% increase in rental income. Then down below, expenses excluding depreciation, we had a 3.2% increase from 23 to 24. And then a increase on top of that of 4.2 from 24 to 25. And when you're excluding depreciation, which would be which was that category, and then if you include depreciation, which would be total expenses, you have a 2.9% increase from 23 to 24, and then a 3.6% increase from 24 to 25 for total expenses. So this is going to be the percentage change over time. So, real estate income does have a large percentage change. But if we go back to table 1, you can see the dollar amount is very low. So for table 1, real estate income was only 18,000, then 59,000, then 112,000, as compared to rental income, which is 218 million. So the percentage of income for real estate is extremely low.
That's due to real estate tax, challenges. So when an owner files a challenge against his taxes and wins, he gets a certiorari,
Yeah.
gets money back, These numbers are usually, these percentages are very skewed because there may be only 8 to 10 buildings in the entire sample, which get a real estate tax refund, so. Don't be, frightened by 227 and 869, that's a couple of buildings that did that, so. It's not really, it's a very small portion of the whole.
Yeah, as you can see, insurance, as everybody probably knows, has been kind of one of the larger increases in expenses over the past couple of years, so there were 15.1. There was a 15.1% increase in 23-24, and then another 10.3% increase in 24-25. But if we refer back to table 2, insurance makes up anywhere from 7.6% to 9.1%. So again, we're referring back to the percentage of total expenses. So those 3 larger categories were repairs and maintenance, interest, and real estate taxes, so. Those categories have, real estate taxes went up 2.9 and 1.8 within the 3-year period. Repairs and maintenance, 1.8 and 2.5 in the 2-year period on table 3. And then interest had a 2.7 and 5% increase within the 2-year period. Does anybody have any questions about table 3?
So basically, interest almost. Double.
The rate of increase.
Well, the rate of increase almost doubled, yes, so. Yeah, so yeah, we did notice quite a bit of owners, and we provide that number in the explanatory statement, so you'll receive a report. Within a week to 2 weeks prior to the vote meeting, which explains in detail, word for word, everything here. We do also provide refinance numbers, so we did notice a lot of owners did refinance also at a higher rate. We do know.
Especially after the pandemic.
Yeah.
Well, their mortgages came due.
Exactly, yes.
Right.
Could be a variety of reasons, we don't know why, but their interest rates increased, so they were paying more interest expenses. Okay, we can move over to table 4, which is, cash flow as a percent of income. So this table coincides with the cost to income ratio, which is a single sheet we provided to you, but we'll discuss this sheet first. So here you can see the income and the expenses before depreciation and after depreciation. So as you can see, before depreciation, see the change over time. So from 23 to 25, it went from 26% to 25.58, then to 24.79. And then after depreciation, follows the same pattern.
If you do an NOI, opposite
You would think that,
of cash flow.
you would think that, of course, the depreciating building. So, it'll go down.
Well, this is income over total expenses as well as income minus depreciation, so.
The other policy is you don't know what methodology of depreciation that these owners are taking could be different from one owner to the other.
Yeah,
It could be different within certain buildings.
sure, an owner could depreciate their building based on, over a 1-year period or over a longer period based upon useful life.
They could have celebrated or whatever.
Yes,
Well, I think, if you're depreciating a capital, there's a boiler or windows or it's over a 20-something year period. Right, but if you're depreciating, sometimes the argument can be made that the building is rising in value as years go by.
What I'm saying, the formula can vary.
the formula could vary based on owner.
It's all what the owner wants.
Yeah.
It's accounting regulations then, that we don't.
And from
Absolutely.
what we see, the schedules coming in, if you saw the depreciation,
And then
it's up and down.
Then we're assuming also through this in terms of income expenses, that the owners are giving us the accurate information.
Especially on depreciation.
Okay, that's what I'm saying.
Yeah,
That's why
The other
that's why the cost to income ratio.
The other question I had whether or not the sample size is projectable. Is it such that the end number is projectable for the whole county, based upon the number of statewide units? Is that 400 number, a number that is projected?
You mean that's
I'm just throwing it out.
you mean a solid number for a survey?
Yeah.
Yeah.
Yeah, you know, we feel that it is, you know, over the years, we've provided, you know, all of us in this particular, speaking here, I've done this for 20 years, actually, all of us, so, you know, the sample size is usually pretty accurate. I'm sorry, the sample size is pretty steady over the years. Whether it's projectable or not is really something, the question we really don't know. But, you know, there are certain measures that we can see by this, right? We could see the vacancy tables, which show the kind of the increase in median rent. We see the average legal regulated rent, which we can kind of see the increases in that as well. So we can't say exactly, but we're hopeful it is, and that's why we try to garner as much of the population as
The
possible.
reality is based upon your year's experience,
Yes,
you know, the trends that you have seen. You think it's done.
we do.
Yes.
That's what I'm saying.
Yes, we do.
So-
I mean, we can see to the point that whatever you guys do at the end of this month, we can see its reaction in a year or 2 or 3 years. And we can see those, we can see these numbers, not to mention, we know, you know, what the numbers are, you know, expenses. We can see outliers instantly, we can see exactly where we may have questions about.
The validity of the sample that related the numbers. But based upon, I don't know how many years, I won't say that, and number of surveys that you've done, that you feel that is valid. That's the only thing we can go on.
Yeah, very much so.
Okay.
Well, there are other things that you could go on. It's also your real estate background and your economic background. So you take all that into consideration when you guys do get together and vote on promulgating guidelines. Survey is part of it.
Yeah, I understand.
Yeah.
Don't just speak to the survey.
Okay.
You know, in the past, members of this board have asked me, you know, oh, so we're only gonna take the survey, and I used to tell them, no, the survey is just like an element during your deliberation. You as a board member have the right to present to other board members other information that you find to be valid.
Yeah, I'm not speaking against it.
Yeah.
I'm just saying.
Part of the process.
So we have a single page, or it says, cost to income ratio. It has quite a bit of, numbers going all the way back to 1987.
I have, I think maybe a couple copies, let me see.
I still need more.
Mike, yeah? Anyone else needs?
You
Everyone
guys
got
got our emails, right?
Mike, you need?
Thank you.
You're welcome.
Okay. And you good over there?
Just said that.
Yeah.
Last week. Yeah, right, sir.
Like that.
Remember. Trying to fit text.
Yeah,
Yeah.
we got a program.
Let's see, what is it really, you know, sure. Put it in there, sure.
Emails, put it in writing.
Yeah,
Oh, let's see, you got them, just push it up, and you get the grant.
you wanna go with against the table? right?
Yeah, so this is, you know, somewhat, pertaining to the cash flow, but this also includes, excludes interest as well as depreciation. So, as you can see in 2025, when you're using, total income, total expenses, the cost income ratio is 83.04%. When you are excluding interest and depreciation, the cost to income ratio is 64.31%. And if you kind of just look up, you know, over the previous years, the cost to income ratio has, kind of stayed steady to a degree.
Well, since COVID, for sure.
There's some variation, but the numbers are pretty steady over the past 4 years or so.
Doesn't include mortgage, right?
Yes.
So the survey does not include amortization, it includes interest expense. So it includes mortgage interest, not amortization. Or any type of prepayment penalties or refinance costs, so that's excluded from the survey, and it says that in the instructions. Yeah. Any questions?
Nope. Been here,
Okay.
been there.
Alright, so, we also provided to you guys, which we're not really gonna go over, is the 18 schedule, which is, no heat, hot water, so no heat. So if the owner does not pay for the heat, we have a separate set of tabulations there. Which describes those 18 buildings. Pretty small sample, only 18 buildings from, Westchester County, so it's relatively small. We have another landscaped document, which is the vacancy changes report. It also has the New York State seal on it, and it has some rent ranges on the left-hand column and rent ranges on the top.
Looks like this.
Right by front.
President. So this is 4 pages.
You guys have it over there?
Please check.
So this vacancy changes report is broken down
Thank
into
you.
dollar amounts and percentage change amounts. As well as 1 year and 2 year leases. So the first 2 pages are going to be rent ranges, whereas these second 2 pages, the final 2 pages are percentage changes. First page is for 1 year, second page is for 2 year, third page is for 1 year, fourth page is for 2 year. So the way this table is read is basically from left to right. Or left to top, I'm sorry. So if we were to look at the number 9, which is in the middle, almost directly in the middle of the table. But it's on the $1,500 to $1,990 range. So that number 9 there were 9 apartments that went from 1,500. Between a range of 1,500 to 1,999. To a range of 2,000 to 2,490. So the majority of the apartments stay within the same range, and those lower numbers are usually numbers that either usually fall into a higher range. So kind of if you look almost diagonally, you can see all the numbers that stay within the same range. So looking right to the left of that is 102, so there were 102 apartments that stayed within that $1,500 to $1,999 range. If you kind of look diagonally to the left, you can see there were 60 apartments that stayed within that range, and then 10 apartments that stayed within the $500 to $999. If you go to the right, down in the diagonal, you can see those apartments also stayed within the same range. So the majority of the apartments do stay within the same range, with a handful of them that do go into the next category. But this again, this isn't percentage changes. So when we go to table, third page, we kind of have the percentage change. So technically, an apartment was $1999, and it now went up 2%. That apartment now is going into the $2,000.
Right, so what this does is. These are for apartments where a tenant moved out, vacated the apartment. During the survey period of 3 years, so the 2026 survey covered 23, 24, and 25. So the tenant moved out during that 3 years and moved in 2025. This shows where the tenant's rent was and then where the new tenant moved in and where it landed. If that helps. But maybe I don't know.
Yeah, so, you know, previous rent over current rent, so the tenant vacated and has a new tenant in, that's a new rent, so.
As reported in the survey.
So the first page is 1 year, the second page is 2-year leases, so. We look all the way to the bottom right corner, we can see the total, so out of the 11,829 units, there were 317 that were re-rented, so for 1-year lease. So 317 units were re-rented in a 1-year lease. If we flip to the next page, we can see there were 70 tenants or 70 apartments that were re-rented for a 2-year lease.
Yes, there's a person now, of a registered lots of apartment. Who had a 2-year lease. And then they rented to another person for 2 years, right? How did the rent change?
The owner is allowed, well, as of the law of 2019, the Housing Stability and Protection Act, 2019, eliminated the 20% vacancy allowance. So now, when a tenant moves out, the new tenant is only, the owner can only increase the rent by the
The guideline is.
guideline increase. The guideline increase.
And then I,
Down like increase. Oh, clear.
Right.
So it's a guideline increase. IAI, or if the tenant who moved out had a preferential rent and then they decide to raise the rent to the legal rent or something higher than the preference that the tenant who moved out has. Those are
Yes.
3 different ways that the rent could. go.
That's good.
Sure, so the third page is gonna show the percent changes. For 1-year leases, so again, these are broken down by 1 and 2-year leases, so the third page is 1-year lease. So I believe the guidelines, so the guidelines were under 5% last year, right, for any apartments that were
2 and 3.
2 and 3, right? So the majority of that 317, as you can see, is 263 out of 317, so the large majority is under that 5%. And this is for 1-year leases. As you can see, there's a handful of apartments that do have higher increases. And again, it's because of IAIs, MCIs and stuff like that. So I believe the maximum amount is now, around $300 for, we'll just estimate for an apartment. So if you had an apartment that was $600 and went up $300 by a complete IAI, which is approximately $50,000 was the max. So that's really a very large percentage increase. We didn't have any of these this year, but there were apartments that were on the lower end of the scale and did have IAIs, and we did return quite a few of them back to get explanation from the owners to be sure that they were reporting the vacancy increase in rent accordingly based upon the new 2019 guidelines. So they were either IAIs, there were lower rents, or there were, also the rent guideline increases. So that's why you're gonna see, a handful of them that are higher than that guideline. 2% for 1-year leases for this. And then the following page is going to be for 2-year leases. And again, you can see the large majority under the column under 5%, 61% out of the total. If you look all the way to the right, is 70, so 61 out of 70 of those apartments were vacated and re-rented in 2025 at a rental change of under 5%. And as you can see, again, there's a handful of them that have some increases that are above 5%, anywhere from 5 to 29.9% and 30%. Also on these tables on the bottom, you can see the median percent increase and the mean percent increase. So the guidelines last year were 2% and 1%. So I'm sorry, 2% and 3%. So for 1-year leases, the median percent increase is 2.5%. And for 2-year leases, the median percent increase was 3.5%. So it definitely falls in line to the guideline increases, with the addition of possible IAIs where it can have a little bit of an increase based upon a decent dollar amount. So it does fall in line with the guideline increases promulgated last year.
What it shows is the owners are pretty much following in line with the guideline increases on a vacancy. 20% allowance has been disallowed. So on a 1 year vacancy, the median rent increase was 2.5%. Last year, this board passed 2% guideline increases. So it's just about right there, you know, where it should be. Prior to 2019, we would see 17% increases, 20% increases, because they were allowed 20% plus the guide, plus the increase in renewal as well, plus IAIs, plus MCIs, so this has come way down. So the laws of 2019 have taken a profound effect on vacancies, that's for sure.
So I think this concludes our portion of the presentation of the tables and documents that we provided you guys. Was there any further questions? for us?
Thank you, Chairman.
Any questions? Any questions?
Move to adjourn.
But thank you very much, you guys, as always, you did good. Thank you.
Thank you for your presence and thank you for your help and excuse me, if anybody in the board has a question for the gentleman here, please send them an email. We copy to everybody.
Sure. Very important. If anybody sends me an email, please make sure everyone on the board is a part of the email, including the council.
Right, yeah. I don't think I have to write an email for this, but I just want to make another request for the numbering of the pages.
I actually made a note. I did make it. I
I
said to myself, you know, maybe I'll surprise her next year, so. So I made a note. You got it.
So our next meeting is our next meeting is Thursday in Yonkers. It's at the Black
Riverfront Library, yeah.
Riverfront Library.
You got it.
No problem.
Do I hear a motion to adjourn? Second?
It's 6 p.m.
Correct, yeah.
The meeting is adjourned. Thank you.